Happy Friday, traders. Thanks for joining me on this 24th of September, 2021. It's 8:01 a.m. Chicago time for episode 2080 today as we approach the 21st, 2100th episode. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's just jump right in. I feel very distracted this morning. I apologize with all those ahs, but we'll take a look at what's going on currently. The market is in a risk-off posture. The posture is mild risk-off. We're seeing flows out of equities, out of a lot, everything, it seems. There's nothing major in terms of key earnings and things. We're still dealing with the U.S. fiscal deadlock, which would be significant starting the 1st of October. The fiscal year ends on the 30th of September, and the Democrats, who have the majority in Congress, are scrambling to get something going. The expectation is that there would provide a gap budget measure to carry the country forward, the federal government forward for 2 months, or they may experience a partial shutdown. That's a concern. That's an overhang, as we say, in the markets. Also, Evergrande or Evergrande, depending on who you talk to, has not made its $87 billion bond payment to investors. It missed it today. However, technically, it has 30 days to make that payment before a default is declared and action is taken. It has another large payment, I believe, on the 29th, and it's probably going to miss that. I mean, $87 billion payment. That's really high. The Chinese government, in response to this, remember, this is what the market is attributing the sell-off on Monday to, and the rally, and the rally over the last couple of days too as well. The expectation is that it wouldn't make ends meet, and it doesn't seem to be. There will not likely be a bailout by the Chinese government. The Chinese government, based on the latest statements from Xi Jinping, that they want to cut down on speculative activity in the Chinese economy, and they believe that housing is not something people should be speculating in. But Evergrande and several other major developers are definitely speculating and are extremely over leveraged, and it looks like the Chinese government's going to try to execute a controlled crash landing in that sector. So this is likely to have quite a bit of overhang. The property sector is really large in China. So this has to do with the global growth potential and major drag. And so we're going to continue to see this saga play out. So that's something that we just need to be a macro issue that we need to be aware of. As far as what's on deck for today, we have Fed's Chair Powell. I think I called him Colin Powell yesterday. I was watching a 9/11 thing the night before, and I might have called him Colin Powell. But our friend Jerome Powell, J-Dog, is on at 10 a.m. Eastern today. Fed's Clarita, Bowman, and then we have new home sales month on month also at the same time. All of these numbers at 10 o'clock Eastern. And so that's where that stands. The S&P right now has traded 231,000 contracts, which is relatively high, and has had 40.75 points of range. The market has dropped from 51.50 down into 44.1075 with a point of control at 44.23. I want to remind you that the S&P settled a week ago at 44.2175. That was the settlement last week, and the low on Friday it was 44.16, and we gapped way below that on Monday, came back, filled that in yesterday, and we are currently below that. So what I'm trying to say here is it's a touch and go. We're in a touch and go area in the S&P right now. As always, trade what you see, not what's going on in the macro picture and Powell, and all of that is noise. But it's really important to know what the bigger picture is. But still, just because news comes out, and this is about trading the news, which is something I should probably do a public video about. People get confused about what the role of a news feed is, but you're not trading the news. What you want to know is what everybody else knows, and then the key, just like most things in the markets, including your levels that you trade off of, your stock zones or whatever you want to call them, decision areas. You don't sit there and just trade those levels. You're looking for a reaction, and you're prepared for that reaction because you heard the news or are aware of what's going on around you. So remember, the market is just one big long novel, a big long saga, and our job is to just maintain our knowledge of the story and how it may impact things. But when it comes to trading, when you distill that into a trade, you still have to trade your levels, your signals, your setups, not in the middle of nowhere. Crypto got hit this morning. There was a news article that I read this morning. I believe it was the Wall Street Journal plus someone else. I don't remember. It was maybe AP or Reuters, saying that at first the short story was China is to make crypto trading illegal. But when you dig into the story, apparently this is old news. And what it is it's the Chinese central bank chair saying that crypto should be completely illegal in China. Nonetheless, you see that the cryptos got hit, especially Ether. And it's trading below the 3,000 mark. It's a big move down for the day, quite a substantial percentage. The entire crypto and altcoin space is seeing high single digit to double digit drops today. So that's the recap. Let's take a look at what was expected yesterday. I have to tell you about a real frustrating kind of thing that happened yesterday because I didn't cross-check my data feed. My data feed is DTN IQ feed, which is a strictly high-ish end data feed. They don't do trading, they just do data. They provide ag data, they provide weather data, they provide stock, whatever. It's a company that's been around for a long time, and I've been using them for about 15 years. And that's the main data feed into my charts. What I don't do on a regular basis is cross-check my professional data feed with my trading platform, Edge Pro X, to see if the delta is correct. And what they had is a server issue, which we've seen before. I think I might have seen it maybe 5 or 6 times in the 15 years, where their data feed was not receiving buy prints. It was only receiving sell prints on the ES and various other products on the CME. And so that's where you see us making a new high on the overnight session, but a massive delta. To me, this massive sell delta here, which turned out to be incorrect, seeing a massive sell delta like this, to me, is a strong indication of an excess. And that's how I read it. Therefore, my expectation on both sides is that we are likely to carry forward from balance in the overnight session. Remember yesterday, the overnight point of control, mid and VWAP were in the same spot. We had what looked like an excess high on a strong delta move down. This looked like OTF selling as the market was making a high. And so the expectation is this thing is likely to resolve. This play here is likely to resolve to the downside. That turned out to be absolutely and completely incorrect. And so these scenarios were immediately wrong on the open, immediately. And so what we ended up having is actually a rally in the open, which I wouldn't have predicted other than the fact that we are coming out of balance. But we ended up pushing immediately higher off the open. So the opening type yesterday was an open rejection reverse higher. It opened, it attempted to respond, and it got rejected. And then we had a drive-ish push. So yesterday we managed to get ourselves an opening swing, which doesn't happen on open drive and open test drive days generally. Open test drive days, open, test down, and then just drive. We don't get an OS. An open rejection reverse is the other opening type, and from my understanding is Dalton's moving away from these. These were created by Stadelmeyer and then later expressed by Dalton in his books. An open rejection reverse is an open that starts to move in a direction and then it reverses, and it generally has the potential for being a trend, but you don't see a drive. So you end up with an opening swing despite the directional movement. That's what an open rejection reverse, how that's different than an open test drive. Also, the open test drive generally occurs against a major test area, but not always. And then the other driving type of open is an open drive. And what you have there is it opens, it ticks down, 2 ticks down, and it just absolutely explodes directionally with the delta climbing with price. And what that tells us is it's likely to be a wide-ranging IB. It's likely to be a trending day, at least for the first 2 hours. And we don't stand in the way of that. And identifying the opening type early is an edge in that it helps us decide which tools in our toolbox we would like to use. You know, you as a trader, you need to have two sets of mentalities and setups or categories in your toolbox of trades. You need to have an imbalance tool set, which means trending, momentum type, buying pullbacks on a trend day. So you need to have that. And then you need to have a balanced tool set, which means that you would be fading highs or fading extremes back into the middle. And that's where things like CCI, RSI, and those kinds of oscillators make sense. Try using an RSI on a trend up day and you're likely to get crushed. So you need to recognize early on that I can't use those oscillators and momentum or reverting type indicators that tell me the market's extremely overbought, oversold. So I don't think I've seen a book that explains that, but that is a fact of life. And so we use the opening type and we use the delta to inform that, inform those decisions early. So I can tell very early on that I should not be looking for shorts and should not be fading the move based on the fact that the open tested down and drove up, open drove up, or tested down, rejected, and started to push higher in an orderly way as opposed to a drive. Those are the three trend-ish type of opens. The mean reversion type open is an open auction in or out of range. And for those tool sets, we start to look at the levels above and below and look for signs to fade those areas back towards the open. We end up with a back and forth day, which You can make money on those days, but you have to recognize them as early as possible. That's a quick crash course there on opening types. It was uncalled for, but here we are. So here's the open. We push, we reject the prior day's high or the prior day's range, 44.0650, and off to the races we go. The key areas I had up here, were 44.35, which we saw a reaction in right here. 44.35, this area here, that was the first kind of area that slowed things down. And then the second area above there was 44.50, which, by the way, saw a tremendous amount of volume. The areas that really counted yesterday are 28.29, and I'll let you in on a little thing that I use for this. 28.29, 35 to 37 is the next big area, and then 48 to 51 were key areas, and then beyond there I had a stock zone at 56.75, and that basically was the top of the session. The stock zone at 56.75 is minor, but that's where the market ran into a lot of resistance. In fact, the market really battled this 44.50 area, and there was some selling going on before we got there. Here's how I see it. See those little boxes there? Those are not indicators, lagging indicators. Those are real-time indicators. I'm not going to talk about them. And you can see that as we push into these stock zone areas, you can see that these are reactions, and those are setups to trade. And you can see there's just a tremendous number of these as we push into 44.50. And I talked about this in the Head Trader channel on Convergent Trading yesterday as it was happening. I was telling our members that, hey, this is very tough. There's a huge battle here. There's a lot of hidden volume going into this in the order flow, and this is likely to be a failure area and a top, and that pretty much marked the top of the session. You know, hindsight's 2020, and I'm not saying that I can do this all the time, but this to me was very obvious. This was huge supply as we pushed through the 35 into 50. There was a lot of activity by the higher time frame, in my opinion. So that's important. Not taking questions about what that indicator is or anything like that. I don't need that indicator. You can see this information in the tape, in the order flow, and I certainly don't need other tools to be able to see it. It's right there on your DOM and in the time and sales, which is available on every platform. And then the market ended up returning back to the RTH VWAP before closing on what is basically a short covering profile or a P-shaped profile. Okay, let's move on. What has happened since? What has happened since is very simply those people who were getting short into that 44.50 and all the way through to 44.55, which, by the way, a 10-point range for a higher time frame is nothing. That's just slippage. So we end up rolling over. Let me turn these off. They're not. They're today's. They're misleading because they're based on. They may include yesterday's action, so they're misleading for our review. We return back to this high volume area, so we end up finishing yesterday in that 35-38 zone, which is really important. And then we make an attempt with a lower high, and what we have now is a trend down. It's a multi-distribution profile, but really it's a trend. So you could see that the rotations are staying ahead of VWAP, ahead of mid, and there's price discovery to the downside pretty consistently. I'm classifying this as trend versus multi-distribution. What's the difference? Trend has to be treated differently. When we open, we need to pay more attention to how it opens on a trend day versus a multi-distribution or a balance day where it could chop around on the open and there's an opportunity later to get on. Although, but a trend day, we may see a move immediately and the formation of one-way directional trading, and that we need to get on early. So this is a B-shaped, what's called a B-shaped profile, which describes long liquidation. So while we had a P-shaped profile yesterday, what we have done is we have reversed a huge part of the action. And where did we reverse it? We reversed it between 35 and 30, with most of the volume occurring around 38. So 35 to 38 is our key resistance for today, and we are well ahead of it. That's what we're getting out of this chart. 237,000 contracts traded and a relatively wide volume tells us that there's likely to be some decent activity on the open. So I'm going to hop right into what's expected for the day so I can let you go about your business. These trader bites, man, it's really hard to keep them short, especially when there's a lot of structure and activity. I do my best, but I think I often ramble on and hold you here much longer than I need to. But this is my life here, trading. So this morning, given the way we are postured, and given the key areas that are outlined, let me cut this down a little bit. The key areas that are outlined here, we have what is a weakish low with a fair amount of resistance. I'm going to throw this box on here that I had earlier. Clean that up. Thank you. This is a key first test area from yesterday. It's the key low volume node from yesterday, and it is the key low volume node from today's action. You can see it right there. Low volume node, right? So this area here will be primary resistance, anticipated primary resistance as we push up, and this is a scale in. This stock zone is a scale in short zone on a first try. If we try to push for settlement, which was 44.38 quarter or something like that. So this morning I'm expecting this to be relatively responsive back to the overnight point of control. I expect it to push back up or attempt to push back up into the overnight point of control, maybe get to the 24, consolidate, and then try to squeeze lower. Remember, one-time framing has been moving up, and so this low here at 44.01 is important. If it breaches the 44.01, expect a breach, pull back, look for an area to lean against, and then it's likely to start testing out that 85 and bring us back into the lower balance here, which is the 80 in between this this 85 to 76 area. That would be scenario one before the bounce into the weekend. We've run quite a ways since Monday, but we're really battling last week's settlement and last week's low. So 44.16 and 44.21.75.22 from last week. Those are key areas where we finished last week, and we are right here against this area. So I'm suspecting that it's done driving to the upside. I think it's not likely to push higher. The secondary scenario is the buying scenario, and that's an open right up here, push the low, get into the former high at 44.0650 from a couple days ago, push into that 44.0650, and then have an impulse up and then start to push into the overnight point of control into 35.38 and rest here. And that may give us a continued higher low, but today is likely to be an inflection day. We're likely to see it slow down and taper over based on the action that we saw yesterday and the amount of rallying that has occurred since Monday. So all we did is took back the gap or the space back into last week's settlement to 44.50, and we are starting to roll over is the way it looks to me. Anyway, it's a lot to cover. Good luck today. Manage your risk. Make sure you're not going into the weekend after losing a huge amount of your account. And I want to remind you again that you should have broker imposed daily limits. If you don't, probably should talk to one of these guys from EdgeClear to get you set up with a little bit better risk. Don't give up more of your account than a trade is worth. There is no trade out there that is worth giving up a huge sum of your account into, and definitely not coming into the weekend. Good luck. I'll catch you on Monday morning. Take care.